All right, so we begin this hour with a strongly worded response from President Trump on Fed Chair Jerome Powell's comments at a conference yesterday. Powell says the central bank could face a challenging scenario as it adjusts to the tariffs imposed by the White House. He also warned the Trump tariff conflict would likely include higher inflation and slower growth. President Trump snapped back on Truth Social this morning. You see it right here. He's calling Powell, quote, too late and wrong. He also says Powell's termination cannot come fast enough. As you see, that's a direct quote. And we have team coverage on this for you this morning. CBS News Money Watch correspondent Kelly O'Grady is in Studio 57. You see her on the right of your screen. But let's begin with CBS News correspondent Natalie Brand at the White House. Natalie, good morning to you. The president originally nominated Jerome Powell for this post. So does he even really have the power to just unilaterally fire him?
And Chair Powell, Errol, has been asked about this himself and said no, that the president does not have the legal authority to terminate, to fire the president or to remove him except for cause. Although we know and we've seen President Trump, the Trump administration, trying to exert more power over independent agencies, the Fed being one of them. But note in an executive order that the president earlier signed trying to do just that, the Federal Reserve, specifically its monetary policy, was exempt from that executive order. Now, I tried to ask the White House for clarification about that tweet, what exactly the president meant by that. And one of the communications team said, well, we'll have to wait and see what the president says about it later today when he's likely going to be asked about it by reporters. Now, note that Chair Powell's term as chair expires in May of next year, 2026, but his term as member on the board of governors expires in 2028, Errol.
And meanwhile, Natalie, the state of California is now filing a lawsuit in regards to the president's sweeping tariff policy. This state would be one of the world's largest economies by itself. What's the justification for why California is doing this?
Yeah, California, the fifth largest economy in the world. Well, the governor there, Gavin Newsom, and according to this new suit, says that the president does not have the authority to unilaterally impose tariffs under that act, the International Economic Foreign Powers Act, which was used to impose this sweeping tariff policy. He's also noted that his state, with heavy investment in the tech sector, in agriculture, could stand to lose, he says, billions of dollars. Take a listen to what he had to say.
This is recklessness at another level. The impacts already on the lack of investment. Any business person, small or large, uncertainty is the number one enemy. Just give us certainty.
Now, the White House has continued to defend its tariff and trade policy, saying that it's a, quote, historic effort to address the national emergency of a persistent and large trade deficit. Errol.
And meanwhile, Natalie, we know that many nations are hustling to get a deal with the U.S. before this 90-day pause on tariffs ends. The president said he had a great conversation with the president of Mexico yesterday. He met with the Japanese delegation, and today he's set to meet with the Italian prime minister. Do we see anything tangible coming from these talks just yet?
Yeah, well, Errol, the White House has touted these negotiations as, progress in the process. These talks are happening with trading partners, but we have yet to see any firm trade deals or details of deals that are in the works. So that remains to be seen. Obviously, trade policy is highly complex and technical. And as we've been reporting, there's more than 70 countries that the White House has said are calling. So it has to hash out these negotiations with all of them. We're also waiting to hear for progress on if and when talks between the U.S. and China will occur, since there is an escalating trade war there. The president, in that social media post touting the calls that you referenced, said that even China wants to meet. But again, we do not have details of whether there's any progress on that front.
Yeah, and we'll keep looking at that closely. Natalie Brand with the latest at the White House. Thanks so much. Let's jump over now to CBS News Money Watch correspondent Kelly O'Grady joining us from Studio 57. Kelly, what is your read on the Fed chair's remarks from yesterday? Because he likely anticipated the president's fiery response, which came this morning.
Yeah, Fed Chair Powell is always very calculated in the messaging. He's traditionally very tempered in how he delivers his remarks. I mean, for months leading up to the president taking office, we would ask him, how are tariffs going to impact? And it was always a wait and see. What I take from this are kind of two main things. He is a very data-driven person. And yesterday we heard him say we are actually starting to see slowing economic growth show up in the data. And so it's no longer we're going to have to wait and see how consumer sentiment impacts that. He actually fully admitted that we are seeing a little bit of a slowdown, even though the economic fundamentals remain stable, I would say. The other thing is this high inflation and high unemployment possibility. You heard him say that these two things could be in tension, and the Fed's main goals are to keep inflation low and to keep the labor market strong. And so he didn't say stagflation, but when you put those two things together, that's what you get. And so you saw investors, the second he started speaking yesterday, the Dow started dropping because investors hearing Powell just so brazenly talking about that, I think, caused a lot of concern, Errol.
And we're looking at a chart of the Fed and its activity on interest rates over the past year plus. Just a few moments ago, you know, the European Central Bank lowered its interest rates by 25 basis points. How might that impact the Fed? We know that its decisions are independent and it's focusing on the U.S. market, but how might that be connected?
You know, based on who I'm talking to, this likely isn't going to impact the Fed. The European Union was kind of in a different situation. They have more of a need to stimulate growth. And even, you know, Christine Lagarde has been talking all morning at that meeting, and I've been following it. And they were highlighting sort of the trade outlook and all of that uncertainty being very, very, very much a driver of this cut. When you listen to the Fed, it's been more messaging of let's wait and see. Our fundamentals are solid. We don't need to make any rash decisions. So I think the European Union just economically was in a little bit of a different spot, and that's unlikely to have an impact on what Powell does next May.
Okay, and I did hear Christine Lagarde also mention the low unemployment rate that Europe is enjoying as well. Kelly O'Grady with the latest there. Thank you so much.